Welcome back to the Crypto Market Updates channel. My name is Jack, and in today's video, I would like to address some of the questions that some of the viewers of this very small and young channel, slowly growing channel, have had posted below the comment sections, in the comment sections of some of the videos. All the questions are in regards to the video I posted a little while ago on the futures mock trading account that you can set up on Binance. Gustavo Reda asks, does the mobile app have the mock trading feature? Haven't been able to find it. The answer to that question is sadly no. I believe that the free trading account runs on a test net, which is only available right now on the PC version. Do I need to pay real money for it? No, you don't need to pay real money. Once you set up your free mock trading account, you will receive a $3,000 startup, capital, and then you're ready to go. You do not need to make any deposits. This is not connected to your main account, although you can switch between your main account and the testnet account. It does not require for you to make any deposits for this particular trading option. Bro, what will happen if I lose all $3,000? Well, I'm pretty sure nothing will happen, or maybe one of two things will happen. You will either be able to reset your zero balance back to the $3,000 that you had initially, or your balance will have expired and you won't be able to mock trade anymore. Although I don't think the second option will actually happen, because I assume that Binance is encouraging people to practice trading so that they can encourage more people to actually trade in real time with real money. And the final question is, can I ask what is the size that I should put for the coin? Hope you have a complete tutorial for this mock trading. Thanks. I assume that when you say what size of the coin I should put for the trading, I assume that you mean to ask how to actually trade the $3,000. How would I trade it on a mock trading account or in a real-time live account if I had $3,000? So let me go over that now. We'll jump into the trading platform on Binance, and I'll go over some of the features that are available on the trading platform, and then we'll open a trade. By the way, if this is your first time to the channel, then make sure to smash up the likes, subscribe to the channel, and of course hit the little notification bell button so you don't miss any further videos from the channel. Thank you all for the questions. Let's go. So this is my mock trading platform. You can see right here at the top, it says back to live. If I click this, then that will take me back to the live trading session of my Binance account. But in the meantime, we are here. So the trading account starts with $3,000. I'd like to show you, I've got $5,780 right now in my account. I've done some trades just to quickly show you. You can go, if you'd like to know how to what trades you took or have done in the past, you can do that over here at the bottom by going to order history. It's set on 1 day, 1 week, 1 month, so I've been trading for maybe less than a month, I think, or a little bit more than a month. And I can scroll down here and it gives me all the transactions that I've done, all the trading transactions that I've done over the past month. And that is also where you would see your transactions over the past month. Order history is where you can find out all the orders that were placed when you opened the trade, whether it was long or short, or when you closed the trade. The trade history is the history that shows you the profits that you've gained. So if you look over here, realized profit, there are fees, there's the quantity of open trades. It doesn't show the leverage that's been used, but I usually trade on a 20x leverage. Some people trade at higher leverages, some people trade at lower leverages, but since this is a mock trading account, you can do whatever you want. That's what it's for, and it gives you a chance to practice and mess around and lose some of the money that you have. But hopefully, the goal in the real trading account is to not lose your money. So treat the trading account, the mock trading account, like you would your real account, and try not to lose any of your money. So if you look over here, I opened up a trade here, 5,000 I think. Here's some of the profits here. I've had a minus profit, realized profit of $6 here, $132 in profit, $42, $6, $20, $420, $380. So for the most part, my realized profits are in the positive, which is good. If you go over to transaction history, you will receive a clear description of what actually happened. So here's a $2 commission. You have the commission funding fees, and then realized profit. And basically it shows you all the transactions, all the funding fees and commissions that that I have placed, that I had to pay, and so on and so forth. So this was over, I guess, the first trade. Let's see, when was the first trade I placed? That would have been April 19th. That is when I started the account. As you can see, there's a transfer of 3,000 USDT. There you go, that's when it started. And so over the past month and a little bit, I've managed to trade myself into $5,780. Okay, so what do we've got over here? You can choose in the mock trading account, you can choose any currency that you would like to trade. I have it set to Bitcoin USDT because Bitcoin USDT is the best trading pair to trade because it has the highest volume, and it's it's the most traded cryptocurrency pair. It makes it a lot more stable, makes trading a lot more stable in that sense. But if you wanted to trade other cryptocurrency pairs, there's ETH, USDT, Bitcoin Cash, XRP, and you can also trade Coin M, which has slightly different price ranges because it's in US dollars, Bitcoin to US dollar rather than Bitcoin to USDT. So let's stick to Bitcoin USDT. There's a lot to trading, so in this tutorial I will not be able to share everything that there is. There's a lot to learn, but I will show you some things that you can do now that will help you possibly trade a little bit better in the mock trading tutorial, so you get some practice in it. So what I would suggest is to have yourself set up with 1 minute, 5 minutes, 15 minutes, 1 hour, and then you don't need the 4 hour, maybe an 8 hour, 1 day and 1 week, and save. And so I've got 1 minute, 5 minutes, 15 minutes. Here's 1 minute, 5 minutes, 15 minutes, 1 hour, and so on and so forth. Trading on 1 minute is it's difficult because the time frame is very it fluctuates a lot. So this is very good for scalping on 1 minute time frames. If you want to spend a little bit more time, then it's always better to look at larger time frames because it gives you a bit of a better idea of which way the market is moving. So over here, if we look at, for example, the 5 minute, you might think that Bitcoin is going up in price, that the trend is an upward trend, a bullish trend. But really, when you look at the 1 hour, actually you notice that it is a downward trend. And even more so if you look at the 1 day chart, it's actually going kind of sideways all over the place. Okay, so going to the actual trades. Let's do some actual trades. We're gonna go onto a 5 minute trade trading frame, and before I actually go, so here are some things that you should set up. If you can see the lines right here, these are the Bollinger Bands, and the way you can get them set up is by going to the technical indicator option here, and you click that, and then you scroll down to Bollinger Bands. You can set up different options, but I leave it the way it is. It's length 21 and multiplier 2. You can fiddle around with these, but I just leave it the way Binance has it. I haven't changed it, and so it worked fine for me. Usually the way we trade the Bollinger Bands, if you notice, there's a line, there is a middle line that runs in the middle. You can't really see it. Maybe we can change it. You can make adjustments to that, up, middle and down. We could make that a little bit brighter. Yep. Save. If you look at the Bollinger Bands, there is an upper band, lower band, and then there is a middle. And if you notice, whenever, in most cases, this doesn't always work, but whenever the price reaches the upper level, that usually is an indicator, especially when it breaks above the upper band. It usually is a good indicator that you should enter that the price will retrace, go down, and so that may be a good point during which you should enter a short position. So let's say you saw the price break above the upper band and you wanted to open a short trade. You could do that right here and then follow it all the way down here. And I guess if you saw a candle moving in the opposite direction, you could close your trade right here and you would be in a decent profit here. Unfortunately, the tools here don't have as many options as the actual live trading does, so you just have to make good with what you have. A good rule of thumb, and again, it doesn't work always, but is that if the price reaches the midpoint, chances are that it will continue downward, which it has here. If you notice, the price reached the midpoint here, then bounced off, and then continued down all the way down here, at which point right here, at which point it changed directions, and then there was a move up back to the upper band, at which point you could again close your long if you had opened it right here, and then you could open another short right here and then follow that all the way down to here, I guess, or right here, when you notice that a green candle that opened up and the trend may have been maybe at the point of reversal again maybe at the point of reversal again, and also the red candle broke through the lower band of the Bollinger Bands here, and so that may be another indication of the price range moving back up. And so if you notice, this occurs at quite frequently. It didn't, the price broke through over here, it broke down here over here for a long trade, over here for a short, here it didn't quite reach the bottom, so that probably wouldn't have been a good place to start. But you don't always win all trades, but overall, so if you had opened a short here and left it open, you would have seen, if you missed this exit, it would have gone back up, and then right now you could probably close the trade and you'd still be in the same profit as here. So on average, if you look over here as well, see there's you could open a short trade here and then close it over here, open another long trade here and close that over here, and open another short, and so you could basically go short and long all day long. Again, this doesn't always play out. If you look at longer time frames, obviously on longer time frames it does look as if it could play out, but it doesn't always play out in the real world. So these are the last two peaks. This is the peak of November 2021, and here's the peak of April 2021. So the two highest positions at 69,000, Bitcoin reached 69,000 right here, and then 65,000 over here. So, and then since then Bitcoin has had a cascading move to the downside. So let's go ahead and open a trade, and there are three options to open a trade. There is a limit order, a market order, and a stop limit order. For the purpose of this tutorial, I use the limit order, and I use isolated versus cross trading strategy. Isolated means that when you place a position, the position is restricted by the amount of margin allocated to each. If the margin ratio of a position reaches 100%, the position will be liquidated. On cross position, all cross positions under the same margin asset share the same asset cross margin balance. In the event of liquidation, your asset's full margin balance along with any remaining open positions under the asset may be forfeited. So basically, in isolated mode, you choose the amount of Bitcoin or USDT that you would like to invest, and that's together with the margin. Once the position is liquidated, you will be left with the remainder of your balance. In cross, when you use the cross position, once your position doesn't become liquidated until all of your remaining balance basically disappears. So the benefit, I guess, of cross is that if unexpectedly the market decides to turn in the opposite direction of where you thought it would go, you will have a little bit more wiggle room before the position closes. The risk which you run into at that point is that if the market does turn really sour really quickly, as cryptocurrencies often do, then you could potentially lose all of your assets in your account. On the isolated mode, however, you do not run such a risk. You will only lose as much as you are willing to invest in that particular position. So that's why I trade mostly in isolated at 20x. Again, that's pretty large leverage, but feel free to change your leverage. You know, I never recommend trading with such high leverage on live accounts. You can always do 5x and 10x. Let's do 10x for this purpose of the tutorial. So we'll do that. 10x. And the next thing we want to do is look over here at the top. Right here at the top is where the 24-hour where the 24-hour high and the 24-hour low price of the Bitcoin USDT pair is indicated. And if you notice, the highest point at which the Bitcoin USDT price was during the past 24 hours was $31,799, and the lowest price was at $28,813. So with that assumption, I am going to presume right now we are at $30,000, which is only about $2,000. Actually, it's kind of midpoint. And if you notice, the Bollinger Bands have been going down. The way to look at Bollinger Bands is when you see them expanding, like you see here. Sometimes you see thinner lines. This is the indication that let's go on a smaller time frame. As you can see here, the trend is kind of going sideways. It's not going up, it's not going down, it's going sideways, and it's a really good time to do some scalping because the price range remains the same. If you wanted to draw it, you could draw a trend line, let's say from over here right across here, and then another one, let's say from here to here, and this would be the price range within which Bitcoin basically bounces up and down and gives you a lot of opportunities for trading. When the Bollinger Bands open up, like you can see here a little bit, this is the time when the price range is likely to go up. And so right now we are in a price range like this here. It is on the 15-minute chart. It is pretty narrow, which means chances are that Bitcoin will continue to bounce in this range for a little bit. We're going to short it because it's at 30,000. The highest price was 31,000. The lowest is 28. So I'm assuming that it might still, the price of Bitcoin might continue to go down for a little bit longer before it decides to go back up. So the price right now is 30,244. We'll set the buy order at 30,200, and let's say somewhere around here, just a little bit above. It'll give us a little bit of wiggle room. Or for the sake of this tutorial, let's just set it at $30,230 so that we can see the trade open up, and we'll set it at 10%. So I'm going to invest 10% of my USDT portfolio that's available right now, and I'm going to go short. There you go. And so the order has been pushed right here, and it was activated immediately because the price jumped up to 30,234, and now it's back down to 24. And so you can see the price here. Right now we are in profit, $1.14 in profit at a 10 times leverage on Bitcoin USDT perpetual contract, and the price right now is going bouncing up and down. That's the game you play. And so that's it. That's the trade. If you wanted to close the trade right now, you could. Oh, look, it took a massive tumble. Yeah, we had $150 in profit. Look at that, massive dump right now. Massive tumble down. Well called. And so I assume that this will continue. If you notice, the Bollinger Bands are beginning to expand here a little bit. So it's possible that they will expand, and like I said, the price will continue to go down a little bit for a little bit. Because like I said, the 24-hour low price range was at 28,000. So you could, if you wanted to close the order, you could, for example, choose to close the order, and basically you will need to, because you are trading on leverage, if you want to close the order manually, you could do it right now by simply close all positions, or choose the market close or limit close, at which point you would have to set the price at which you would like to close your position. So you can do that by choosing the price at which you would like to close. So let's say I would like to close this position once Bitcoin reaches $39,000. Sorry, not 39. Let's say 29,500. Yeah, $29,000. So let's say once Bitcoin reaches $29,000, I would like this position to close automatically and return all the money that I have. So for that, you need to choose the reduce only, and because you're reducing the position that you have open right now, which is $573, you would choose 100%. That'll close your entire position, which is here's the size. So your margin is $573 times 10. It gives you $5,737. So if I wanted to close the position, I will close all of it, 100% USDT. This is my margin, and then I would go in the opposite direction, which means I have to buy. So because this is a short position, if I want to close the position at $29,000, I place a long position, reduce only 100% of the position, and I buy. And then if you go over here to the open orders, this is the position that is waiting to be closed once Bitcoin reaches $29,000, and at that point the leveraged amount of $5,510 will be closed, and my profits, take profits, will be sent into the account. If your risk ratio begins to go up and it reaches, let's say, 20%, at that point you could choose to add a little bit more, and at that point I would choose to maybe add 5% of my portfolio, and then set it at a little bit before the price of liquidation, which is, so right now the mark price is $30,000. My entry price is $30,230, and the liquidation price is $32,920. So that means that if Bitcoin reaches $32,920, my position will be liquidated. Chances of that happening are not great right now, meaning that it's probably not going to happen because, like I said, over the past 24 hours, we had Bitcoin was hit $31,000. It didn't go up as far as $33,000. If we look over the past day, it basically remained within that same limit. The last time Bitcoin was at $32,000 was, when was this? This was on the 11th, which is nearly a week ago. So yeah, and it looks like the Bollinger Bands are still moving downwards, so chances are that this will continue moving downwards for a little bit. Maybe we might see a little pump over the weekend, as we often do. Chances are that Bitcoin will continue moving sideways, and so this will be a good time for scalping. I hope that this is helpful. I hope that it was thorough enough. If you still have any questions, please make sure to leave them in the comment section below. Don't hesitate to contact me. I'm always grateful for your participation in this fun game of cryptocurrencies. Make sure to smash up the likes, subscribe to the channel, and of course, do not hesitate to contact me. Like I said, you can also follow me on Twitter and check out the Facebook group. There's a small number of people right now, I think 48 people, but there is a communication going on, and so we're always chitty-chatting about this and that. So feel free to check out the Crypto Market Updates Facebook group on Facebook and the Twitter account on Twitter. Thanks again for tuning in, and I'll see you in the next one. Bye-bye.